I think this is the perfect time to consider your position on fractional gold. It may not be a shower, but it could be a huge grower. Some of y'all get that joke later. How many times have we talked about the importance of your perspective? Successful investors have the ability to see what everyone else sees and at the same time see something different. For example, take a look at this picture of a frog. Now, here's the exact same picture, but now I want you to see if you can see the horse. Okay, most of you can't see the horse. How about if I rotate this picture 90 degrees? Do you see the horse now? Please don't just dismiss this activity as a visual or optical illusion. It's about training your brain and your eyes to not stop looking when you see what appears to be obvious. The frog was obvious, and most of us stopped there. But if you kept looking and you were able to shift your frame of reference, meaning your vantage point, you suddenly see the horse. This skill is so very important because as data and the markets change, we have to be mentally nimble so that we can adjust and maybe see the horse hiding within the drawing of the frog. With this concept as a background, I thought it would be good for us to revisit fractional gold in that particular conversation because I honestly think the conversation has shifted given the current market conditions. I know some of you fall into the only buy full ounce camps or bars because you spend less money on premiums. No matter what, that is simply a fact that can't be disputed. The reality is that for many of us, allocating $2,400 for an ounce of gold isn't feasible or comfortable. To address that, some people subscribe to the wait and save up money and then buy the full ounce philosophy. Both of these approaches carry less weight with me right now given the current market conditions. Those two approaches make a ton of sense when the market is chopping sideways, going back and forth in a price range. However, now that gold has broken out and prices continue to accelerate upward, I have three main reasons why these approaches may be less than optimal under the current market conditions. My first point, waiting to save up $2,400 could cost you far more in terms of paying a higher price. So you might save on premium, but you end up paying more in terms of spot price. For example, let's say in February you decided that you wanted to save up for 2 or 3 months, and during that time gold has risen over $300. I don't know about you, but it would be hard for me to stomach that. In an uptrending market, time is of the essence. My second point is that thanks to central bank buying being the biggest driver of this market and not retail buyers, we haven't seen premiums increase with the spot price. When I last checked findbullionprices.com to compare premiums, 1 ounce coins were around 2%, somewhere as low as 1. Half ounces were around 3%, quarter ounces were around 6, and 1/10 ounces were about 10%. But let's not look at the frog. Let's see if we can see the horse in this situation. Let's take a 10th ounce coin, for example. The premium in terms of dollars is only $25. And yes, if you buy 10 of them, you will end up spending $250 in premium, which is absolutely doesn't feel good and way more money. However, if you look at it in terms of how much gold has to go up and for you to be in the green with that purchase, it's only $25. You can make that back in a day. When it's framed that way, that feels very different to me. It's very similar to the frog being you paying $250 in premiums if you end up buying 10 1/10 ounce coins. But the horse is that you only need a $25 increase in gold price to be even, and then you're positive from there on. My third point is much more speculative, so hear me out. The last time we saw the retail market heat up, we saw premiums shoot up. Remember how dealers were buying back silver eagles at $8 over spot and they were selling them at 15? We saw something similar in gold. Here's the part to consider. At $3,000 gold, how many people will be able to buy a full ounce at a time? They're going to buy fractional gold instead, which is going to drive premiums on fractional gold higher, while the 1 ounce gold premium probably won't move as much. And this will create an incredible arbitrage where you could potentially turn in a few fractional coins and get a full ounce by just paying a very small difference. This cost would be a lot lower if you're getting overspot for your fractional coins. This is what a lot of silver people did last time. They traded their eagles in for more ounces of generic silver. I think we'll be in the same situation, be able to do the same kind of thing. Finally, it's always good to have some smaller coins in terms of diversification, especially if you want to cash out a small amount of money. Maybe you want to buy your boo thing, something nice. Having fractional gold is a much easier thing to do if you only need a small amount versus cashing in a full ounce coin. So that's the three reasons. I think this is the perfect time to reconsider your position on fractional gold because you just might see a horse hidden within the picture of a frog. That is why I'm suggesting that fractional gold may not be a shower, but it could be a huge grower. In the comments section, do you prefer 1 ounce gold or fractional? If you buy fractional, What size do you typically buy? Or simply put an A plus in the comments so that everyone knows that you always stack smarter and never stop learning. Now, I want to shift us into the paid sponsored portion of this video. And this is being disseminated on behalf of, now I want to shift us into the paid sponsored portion of this video. This video is being disseminated on behalf of Great Pacific Gold Corp. And before I get into this, I need to remind you that this is not financial advice. And as I always say, you have to be your investor because you have to own your own results. I want to make this point clear because I'm very excited and even bullish to talk about Great Pacific Gold Corp, US stock ticker FSXLF. To be clear, I'm not bullish on Great Pacific Gold Corp because they've sponsored this video. It's because this looks to be one of those investments where the upside significantly outweighs the downside. In full disclosure, at the time of this video, I do not own any shares, but after doing my research on this video, I promise you I will definitely start sprinkling in and slowly building a position. That's how convinced I am. Whenever we talk about investing in mining stocks, we always have to remind ourselves of the Lassonde curve and the associated risk at different points on that curve. While I largely focus on pre-production and early production companies, I definitely allocate some funds to exploration stocks because of the incredible upside. As a reminder, you absolutely have to take a basket approach to these stocks, as one big winner can more than cover the other 9 losers or underperformers. In previous videos, we talked about how to evaluate companies, especially when it comes to leadership, jurisdiction, and geology. Great Pacific Gold checks all of those boxes and more. Let me explain exactly what convinced me to buy some shares. First, the best place to find precious metals is where they've been found in the past. In this case, their flagship project called Wild Dog in Papua New Guinea is a project where gold has been found before. In fact, previous owners of the property drilled more than 1,200 holes and eventually built a high-grade open pit mine in that location. The key here for Great Pacific Gold is that the previous drilling and mining was at very shallow depths. Now they are drilling at deeper depths, and the early results indicate that there is a large and significant porphyry target at deeper levels, which is in addition to the high-grade gold already found at surface. This was what really got my attention. These insane drill holes, y'all. 6.2 meters at 19.16 grams per ton of gold, 8.1 meters at 18.77 grams per ton of gold, and 11.3 at 16.22 grams per ton of gold. And most recently, their sampling has returned insane grades of copper and gold. Specifically, they have a hole 30104 with 242 grams per ton of gold, 601 grams per ton of silver, and 9.52% of copper. In addition to Wild Dog, there are other projects in the same area. What I like is their proximity to 2 of the largest miners in the world. And this is key because if management chooses to sell out in the future, maybe to K92, who's right next door, that becomes a very viable option. I mentioned K92 specifically because of Great Pacific's connection to K92. More on that in a moment. Between companies, another key variable is leadership and whether they have been successful doing what they're currently doing in the past. In the case of Great Pacific, the CEO is Brian Scherslursak. I may have messed that up. Forgive me, folks. Brian is the former co-founder and former president of K92 Mining. Remember that. This is the same K92 that he helped transform from a $2 million investment into a $2 billion company. Just in case you missed this, we have Great Pacific Gold Corp mining right next door and in the same area where K92 has a massive project. That massive project that K92 is mining right now was developed by Brian S. He was the co-founder and president of K92. Yeah. On top of that, one of Great Pacific projects is exploring further into an area where there was a previous producing mine. Oh, and if that wasn't enough cake for us, the icing on this cake is that the current director of Great Pacific is Chris Mueller, who was K92's executive VP of exploration. Great Pacific's advisor is John Lewin, who previously served as K92's former CEO and director. Talk about putting the band back together. This is why I say Great Pacific Gold checks all the boxes in terms of geology, leadership, and jurisdiction. One of the lessons from the Rick Rule classroom is that you want to ride the coattails of individuals who have been successful, particularly in a similar environment where they've had success. Now that we know that there's quote unquote good cake with icing on it, let's add a little sprinkle on top. And by sprinkles, I mean Great Pacific is sitting on $10 million in cash and no debt. This is important because we all know the challenge with mining stocks is stock dilution. With money in the bank and no debt, there doesn't seem to be a need to raise cash, at least in the short term. So there won't be any further dilution of our position and them having to go to the market with their hat in their hand. Even with all that, I haven't even mentioned their projects in Australia where one discovery hole ended up being one of the largest grade holes drilled over the last year. Listen to this. They had at 8 meters, they had 106 grams per ton, including 2 meters at 413 grams per ton. There was another discovery which graded at 4 meters at 25.1 grams per ton, which is also very high grade. Getting to do sponsored videos is great because it allows me to really dig into a company, and Great Pacific Corp has me a little excited and will earn some of my money in the form of a stock purchase. I almost feel like this is kind of like that West Red Lake video I did a while back. I think this is a great opportunity. Don't use my bullishness to serve as proxy for you. You have to do your own diligence. It's an expiration stock, so you need to position appropriately and set a reasonable timeline. In other words, don't go out there and liquidate little Tommy's college fund in order to buy this stock. You have to be the investor because you have to own your results. Thank you again to Great Pacific Gold Corp, US stock ticker FSXLF. Thank you again for sponsoring this portion of the video.